I welcome you to the today CP program on issues of taxation of salaries and ETDS returns. I recognize the presence of past chairman and speaker of the day, CA Pankaj Kumar Trivedi. I request him to please come on to the dais, sir. Thank you. Friends, as we know, we have the due date of TDS returns in this month. So there were many queries and members were asking us to keep a seminar on the ETDS returns, as there are a lot of challenges and sometimes the defaults get generated. So who could be the best speaker than our expert in this subject, who have been handling the payroll and ETDS work since decades of experience. Thank you, sir, for accepting the invitations and ready to address. Sir was very keen on insisting that he will keep the seminar on physical mode only. He said whether it is 4 or 40, it doesn't matter, I will do it physically. Well, sir, members are still not ready to come to physical. No, I insist you. And fortunately, we have a good crowd and mostly another 5-10 minutes, the members will still join. So we request you to please take out some time from your comfort zone. Virtually, we have learned a lot of things. Now it's time to learn and also mingle with our fellow friends and create the networking and also the fellowship. So please, Hyderabad branch is pleased to conduct the physical seminar regularly, and we request you to please attend whenever possible on all the relevant topics. May I now request CA Lokesh Kumar to present bouquet to the speaker. Book bouquet, sorry. Sir. Thank you. So we'll directly start on. So may I request is Lokesh Kumar Divangan to introduce the speaker of the day.
Good evening, professional colleagues. It's my privilege to introduce today's speaker, Shri Pankaj Kumar Trivedi ji. CA Pankaj Kumar Trivedi graduated from Badruka College of Commerce and Arts, Hyderabad in 1986 and qualified as CA in January 1989. He completed his articleship from Mr. Varadachari and Company. He is a senior partner in the firm Trivedi and Bang. He was managing committee member of Hyderabad branch of CERC of ICAI from January 2016 till March 2022 and served as chairman of Hyderabad branch in the year 2020-21. Hyderabad branch won award at national level under his chairmanship. He served as vice chairman in 2019 and treasurer in 2018. He was chairman of SICASA in 2000 and 2017 when SICASA won the award for its performance. He was also committee member of Hyderabad branch of SIRC of ICAI from 1998 to 2000. He was regularly co-opted as member of various committees constituted by ICAI at central, regional and branch level. He is panel speaker in various institutions and has regularly presented papers for Hyderabad branch of ICAI and SIRC of ICAI on academic interest. His main area of practice is payroll accounting and ETDS returns, and he is consultant to various multinational companies like DE Shaw, RCSCM India Private Limited, Synchrony Financials Private Limited, Team Stand, BSTL, Last Brand, Deloitte Group of Companies, Microsoft, etc. He is keen follower of cricket and loves to listen to soft Hindi songs. He is also a theatre artist and has acted in 2 short films. I introduce the speaker of the day for this program, and I welcome you for the program. Thanks a lot.
Thank you, Lokesh bhai. Chairman of the branch, Deepak Ladda, senior members present here. At the outset, I sincerely thank Hyderabad branch for giving me an opportunity to come and present my views here. As Deepak told me, I was insisting for physical meet only. You'd have seen by now that I am not very good looking, and looking at my face and talking for hours is a big pain for me, and I decided that I will avoid that, okay? So rather than looking at the members and getting into discussion mode would be a better option for this important topic. Friends, when we was discussing with Deepak about filing of salary returns, let us go back to few years. Frankly, yeah, I was the most major beneficiary of that, where people just used to give Form 16, money, and rest of the thing my staff used to do, and I used to happily count money, and believe me, I earned enough in salary returns. But as time progressed, with the introduction of e-filing and subsequently so many things, believe me, salary returns is not something very easy nowadays. Salary return cannot be taken as something we used to do as a bulk filing of returns, because too many things are coming around us. So let us also keep in mind that on one side where the department is gathering a lot of data, on the other side, what I always feel is that we as chartered accountants are close to the management of the company. And you would agree with me in one point. Every salaried employee is an unhappy employee. He feels that he is paying more tax. He wants some benefit or the other. And every day, a team goes and talks to HR, requesting them to introduce so many things so that they don't have to pay the tax. And the management also, sometimes they feel vexed. They straight away talk to us, what should we do? Is it okay? And believe me, there are so many things where there is a thin line between exempted and not exempted. Now, if you are giving a plain reading of something, it appears that something is tax-free. And we might just believe our intuition and say it's tax-free. They also put it in the company, and then in the next CFO meeting or CEO meeting, they will come to know that, no, it is taxable. How can your CA say it is not taxable? Now the problem is, my wrong decision is directly with the top management, and it definitely affects my practice, my reputation, and everything. So, keeping this in mind, I request you, don't give any opinion on the phone. Please wait, let them write what they want clearly. Food iyacha, tax-free, that will be the question. See, there are so many things, but when they introduce, it won't be food, but it would be meal coupon. And these two are completely opposite things. So, my first request to all of you is, whenever something comes for an opinion, let them send a mail to you. Let them send incomplete what they want, and then please give the opinion. Otherwise, you know the episode happening at Gurugram now. Okay, I don't think Hyderabad council members and branch committee members would be eager to come and help us in the department and all. Okay, so what we'll do is, I'll quickly take you through the clauses. I'm not going section by section. I'm trying to cover only the important topics and the topics which have more than one opinion and not straightforward written in the books. Let us discuss it. I am only initiating the talk. By no means I claim myself to be a speaker who will always give correct opinion, but I would very humbly like to come here as an initiator of discussion, and any other opinion would be welcome. It will be for the benefit of members. So, agenda for the day, quickly. Let us quickly see what is this old regime and new regime. And There are a couple of issues in new regime which we thought I should tell you, and this is something very important. What are the typical issues with respect to some salary components? Okay, I'm not talking everything, what is basic, what is HRA, what is LTA and all. No, sorry. I'll just pick up few components where invariably some more than one opinion is coming. Let us see that. Then comes to most important and most dangerous topic, taxation of ESOPs. And then let us quickly see income from house property. And then we move on to the May topic, which is filing of ETDS returns. What are the general precautions which we as an employer need to take while filing the returns, and what are the issues we are all facing in filing the ETDS returns? And lastly, with respect to salaried employees, how would we like to go with filing of returns? Now, very quickly, I will come to regime. See, what has happened is effective February 20 budget, our very honorable finance minister very smilingly came on TV and said, friends, you don't have to go to chartered accountant. We are introducing a regime where everything will be very easy, very simple, very straightforward for you. But that is optional. And she started giving, and when she gave the slabs were almost like this. What she did was, if you have seen the old slabs somewhere, okay, I'm sorry, it's not there. We all have by-hearted it. Up to 5 lakhs, it's same. 5 to 10 is 20%, above 10 is 30%. So straight away, that was the slab. And then she said, okay, take this. She brought almost 4 slabs in between, and she said 5 to 7.5 lakhs, 10%, 7.5 to 10, 15. So every 2.5 lakhs were increased, 5% it was increased, and at 15 lakhs we were common. And she said, don't worry, you don't have to go anywhere. And if there is an apple-to-apple comparison, if I take the tax in old or the regular regime for 15 lakhs income, in the old regime, the tax what we pay would be higher by 75,000 rupees. And 75,000 rupees is a very big amount. And I was surprised, why is this lady telling optional? Is there anyone who will like to pay more tax of 75,000? And then she continued. So what happens now? We have a regular regime which you have been following for years. And then we have a new tax regime where we can pay lower tax like this. Then she continued a discussion saying that, look, any of you who is interested in going for a new regime need not study anything, need not go to chartered accountant, need not listen to anything, because none of the deductions which are hitherto available to any person will not be available to you. Yes, I am restricting myself to taxation of salaries here. There are several other things which have gone. So now what did she say? LTA benefit gone, house rent allowance gone, standard deduction gone, professional tax gone, loss from self-occupied house gone, all deductions, 80C, 80CCC, 80D, only employer contribution is what it remains, but that 50,000 is also removed. 80D, DD, DDB, everything is gone. And one thing which we never bother, because though it's not a very big amount, all of us have bank accounts, and in bank accounts we have some interest income, and even that interest up to 10,000 was not taxable in regular regime. And she was courteous enough to say, even that section will not be allowed to you, even that tax you have to pay. So now what happened? we have one regime wherein we continue what we followed, continue to claim all the benefits, and then we have another regime where in almost 90% of the cases, my gross salary is straight away taxable because no other benefit is allowed to me. And then she said, don't go to chartered accountant. Believe me, 1999, from the time MNCs came into Hyderabad, because I didn't know how to audit, I didn't know how to do income tax practice, I thought it's an easy one. So I started working for salaried people. And after working for 27 years, I had to go to at least 3 or 4 chartered accountants and understanding ye kahani kya hai, bas en katha idi. Okay, where are we heading for this? So finally, we formed a group. We said, for every 10 rupees, we will start doing the calculation. Let us see how it goes after 5 lakhs, because up to 5 lakhs, it is same. Then let us see for every 10 rupees, we will do the calculation, both under old regime, new regime, and see how does it work. A big Excel was prepared. I'm just bringing a snapshot of it here. Sorry, I'll come back to this slide. Now what I did was, I just taken 5, 6, 7.5 lakh, 8.5 lakh this. So in the first 4 columns, I just took on the new regime. So here what is happening, my gross total income is my taxable income because I don't get any deductions, and I given what is the tax I am paying. Then for the similar income, I took 2 deductions because it is available for everyone. Standard deduction and professional tax. So from the gross total income, I just removed the 2 deductions here. And then what we found was up to 6 lakhs rupees, or for that matter 6 lakhs 1,000 or 6 lakhs 2,000, what we observed was even though you don't have anything, you just be under old regime, you will pay lower taxes compared to the new regime. And as we progressed, we started trying to calculate what would be the tax benefit I would be claiming on all the items which she said is not available, like LTA, HRA, ATC, Chapter 6A and all, to nullify that advantage. So for example, if I am taking the 10 lakhs, okay, in the 10 lakhs, the tax what I calculate in the old regime is 78,000, but the tax what I calculate in the new regime is 1,06,101, which means I have to pay 28,101 more in in the old regime, assuming I don't have any saving benefit. And then we went further and we found that if my Chapter 6A, ATC, Chapter 6A, HRA combined, if it is equal to 1,35,100 rupees, then the benefit what I am getting in new regime is getting nullified. And if my benefits are more than 1,35,000, if I do a 1,50,000 investment under ATC, straight away I pay less tax in old regime. So likewise, when we continue doing the calculation, after 15 lakhs, everywhere we found that the magical figure is 2.5 lakh rupees. If including the standard deduction, including the professional tax, ATC, Chapter 6A and everything, if I am able to manage an investment of 2,50,000 rupees, then blindly I can be in the old regime. So how to decide which is better? No, because this advice we will have to give to many people. And unfortunately, this advice to many employees you will have to give before the year and not at the end of the year, because companies are asking for that. So to choose that, what I have done is, I have done the calculations like this. 52,400 is there for every employee, whether you like it or not. Once I am falling into a taxable bracket, 52,400 is there. It is done. Now, many of the employees, either they stay in a rented house or they have purchased their own house where they are taken the EMI. So either they have the tax benefit on house rent or they have the tax benefit from interest on housing loan, and 95% of the employees will fall into that category. PF is mandatory for every employee. It is very recently people have started going for that 1800 PF, but generally if you look at it, 12% of the basic is a mandatory thing which is done by every company. So whether you like it or not, some part of the investment under 80C is being done by you. Rest of the investment, I'm married, I have children, I have school fees, I have a housing loan, I have principal repayment. So more or less if you see, if we even had done that exercise myself, wherein I have found that out of 1,000 employees, easily 850 plus employees had completed that 1,50,000 rupees. Then LTA, forget about the COVID 2 years. I don't visualize any salaried employee who don't travel. Only thing is they don't claim the LTA benefit, it's a different thing, but generally they travel. Then we have interest on saving bank account. Definitely we get interest and we can claim the tax benefit of interest only in the old regime. So keeping all these things in mind, generally what I said was, if for the entire list what we are giving, if 2,50,000 can be achieved, blindly a person can be in old regime. There will be some people, okay, we understand. One is actually, I'm deviating from my topic. This new regime actually helps the people whom our previous 20 years back chartered accountant practice, some trading, some business, some estimated income, estimated loans we used to put. For them it's an excellent thing because there won't be any saving, there won't be any tax planning, there won't be any bank account also there. So we simply show some 8 lakhs, 10 lakhs, pay lower tax, file the return. For them it is a good scheme. But wherever you come into a organized sector like a salary sector, we have generally ascertained that the people are happy in the old regime except for a simple lot who says that no, I neither pay house rent nor I have a housing loan. I have decided not to invest anywhere. I don't do any investment. I don't travel. I just sit at home. Only there are very hardly there could be 5 or 6% of the people like that who are into new regime, and 99% of the people who are in new regime, believe me friends, they are not understood what is old and what is new. They simply thought anything which is new is good, so we are into new regime. This is exactly what has been told to me by employee. Nava hai to acha rehta na sab. Isliye I selected new regime. I said both acha hai. Now you enjoy that goodness. We'll meet next year. So the problem is, this is something which is tailor-made. That is, what suits for me may not suit Lokesh, what suits for Lokesh may not suit Bhavani, what suits for Bhavani may not suit Deepak and all. So this is one place where we need to study what investments he has, whether there's a HRA benefit or interest on housing loan benefit, interest, ATD and all. And if you can touch the figure of 2.5 lakhs, blindly you are better in old regime. Otherwise, very rare cases, you find that new regime would be a better thing. Like I want to have a saris business in the name of my servant who will not do any tax benefit. So there no GST, nothing was there. So what I do, I used to create the turnover, and I used to write some business, and I used to pay tax in the new regime. It was better for me. But once I'm doing it in a proper way, it won't help us, sir. Okay? If you are coming late, occupying the last benches, that means you are students. Okay, I'm fine. Thank you for coming. Request you not to start talking also, and try to listen, because it's a dry topic. Okay? Thank you. So that's where about choosing the old and new regime is what we have discussed. Slightly important, because for an employee, they cannot change the regime once they inform it to employer. It is only at the time of filing of returns you can change. And now, friends, I am throwing the biggest bomb, which I have realized, I don't know how many of you have seen or not, because nowhere it was written very clearly. Now, the moment I am in new regime, for me, the due date is the last date of filing of returns. I didn't knew it. Let me tell you very frankly, I didn't knew about it. People didn't come to us for filing. They came late. They wanted to file the returns, belatedly paying the penalty. And then we realized that returns are not being accepted in the new regime once the due date of the filing is over. So please be very, very careful with this point. I got a shock of my life. Frankly, I'm telling you, we did the computation from the new regime only. We added interest, we made him pay the tax, and then we say, sorry, the system is not accepting new regime. You have to pay more tax in old regime. I cut a sorry figure, but at least I thought I'll bring it to your notice. So once you opt for a new regime, the calculation of tax in new regime ends on the last date of due date of the filing of returns. The belated returns cannot be filed using new regime, and you have to mandatorily go for old regime here. Last year, sir. I learnt it in the last year filing, sir. Yeah. This year, we have not started filing the returns also. So last year, after this due date in January, I was filing a return, and then suddenly we got a shock that it's not accepting. And then I talked to Abhishek Murli. He says, no, sir, who says you can file? I said, okay, Abhishek, it's not happening. See, Abhishek, I really like the way he explains his knowledge and all. So then I talked to 2 or 3 people. They say, nahi, dekh, kuch galti kar raha. But ultimately, it was very clear. Then I started reading some of the articles wherein it is written that new regime is not applicable for belated returns. Please, sir, we are only discussing, don't worry. Thank you.
So as per what you said, July 31st for non-audit cases and September 30th is the last date for new return.
Yes. And if you are filing it, say, for the non-tax audit cases on 5th August, assuming 31st last date says, you have to recalculate the tax using old regime and pay the tax. And if you get some benefit, you can claim refund also. That's not a problem.
And file 10 IE.
10 IE is again in this. I would have liked to take it at the end, but now that the issue has come, 10 IE, salaried people need not file, sir. Because the way Form 10 IE is worded, it says the income from business and profession is so and so. Okay. So that's where we can't, for salaried people, it's not applicable. Only for non-salaried people, you have to mandatorily file 10 IE. Otherwise, there is a danger. When I'm getting into new regime, I'm not claiming any tax benefit of LIC or whatever I had. But if I don't file 10 IE, what happens is, it will calculate my tax in the old regime tax, and it will take away all the benefits which are available to me. Even LIC standard deduction also, I cannot claim then. So 10I is mandatory if your income includes income from business and profession.
Sir, is there any validation in the system?
System only told me I cannot do it. Otherwise, no CA told me, nor my knowledge told me I cannot do it. That is the problem.
Okay, sir. Thank you.
Thank you. So that's about the old regime and new regime is what we thought. Okay. So now, friends, let us get into some practical unwritten issues which are not there in the books, neither in Reckoner nor any act. These things are there. I learned the hard way dealing with clients. So at least I thought you shouldn't be suffering. Now, the moment I'm talking about HRA here, my concentration for the next 3-4 minutes will be on HRA benefit, because HRA benefit is the most highest benefit what a person can claim, what a salaried employee will be claiming. We were all staying in palatal bungalows by paying the rent of 50, 60, 70, 80,000 also, because people had learned that 50% of the basic, if you pay rent, your HRA becomes tax-free. So all were paying 50% of the basic as rent, whether it is 20,000, 30, 40, 50, no one bothered. Then Income Tax Department brought this concept of PAN number of the landlord. First year, people were intelligent. First 6 months they are staying in one house. Next 6 months they are paying 16,000 and staying in other house. So 15,6 are 90, 16,6 are 96. They say for one person we are not paid more than 1 lakh. Why should I give PAN number? First thing, friends, I know by this time all of us are aware of it. It does not matter how much rent is paid to a landlord. It matters how much rent is paid by an employee. Where an employee pays a cumulative rent of more than 1 lakh, even if it is to several landlords, you need to give PAN number of all the landlords. So suppose a person is in house A for 3 months, house B for 3, house C for 3, house D for 3. 4 landlords, each one is paying 25,000 rupees rent. Though it is 75, total is 3 lakhs. 4 landlords PAN number he has to give. On a practical note, if some of you are advising the employers, don't accept only PAN number, because we have found that our PAN numbers were coming as landlord PAN number. Okay, so don't do that. They manipulate, they manage the PAN numbers and give. Insist for PAN card copy, because the first thing I would like to tell you is this. The rule is very clear. If the cumulative rent paid is more than 1 lakh, you have to give PAN card copy. Now the practical thing what I am telling you is that if that PAN number happens to be a wrong PAN number, as an employer, you are responsible. So please don't take PAN number. Every employee is intelligent enough to know 5 alphabets, 4 numericals and 1 alphabet is a PAN number. They are just imagining and giving, and if that number turns out to be a wrong number, we are at fault, not the employee. So that's why please tell the person management, take PAN card. At least the PAN number is correct. Rest the employee will be handling it. Now, one tax planning, which many of you would have thought about it, or maybe it has missed your mind, I don't know. Last 2 years in COVID, we have realized one thing. The employees are not working from the city of employment. See, pre-COVID, the rule was slightly different. Because when the conditions for claiming tax benefit on HRA was given, section 1013A, HRA received by employee for the house, what happened is we all study for exam, no? So we only know that three conditions: 40% of basic, rent paid minus 10%, HRA received. That's all we are read. And I also by-hearted the same thing, unfortunately. But as a consultant, I have to read something further. HRA received for the house which is occupied by employee. If you look at the, I'm not giving you the exact thing, but it very clearly says HRA received for the house which is being occupied by employee means definitely it gives a meaning that you are talking about the house which is in the city of employment. Because pre-COVID, I'm supposed to go to office every day and come. I cannot be staying in Hyderabad and telling them that I go to Pune every day and come back. So we were insisting, if you are staying in Hyderabad, if your registered office of the company or your working office of the company is in Hyderabad, the rent has to be Hyderabad, Secunderabad, and that is the rule you have been following from last several years. Now, I think our role has come up here. Many people, we know that they are not working from, they're working from home and not in the city of employment. They are gone and they are staying in villages. Happily, they are staying with parents and all. So whenever they do a good thing, we can advise them to get better. So now what happens? Here, if a person, let us say, is working in Hyderabad, is staying in Karimnagar, I'm just giving an example. He's staying in Karimnagar, he's staying with parents, parent are agriculturist, our house is in the name of mother who is not working. Prior to COVID, if this fellow would have given Karimnagar house rent saying that, sir, I pay the rent, still we are not allowing it. But now, rent from anywhere in India can be allowed. Because anywhere in India, the house is occupied by the employee. The company is allowing work from home. So only thing is we believe the employee that he or she is working, staying in that house or that city and working. So whenever we get a chance and whenever we find that the employee is working in a city and staying with the parents or grandfather, grandmother or anywhere who are not working, legally we can advise them to pay rent to such parents, grandparents or anyone, and you can claim tax benefit here. You can stay in that house. Nothing prevents you from staying. Now you are paying rent to your mother is also staying in the same house. Still, legally, it is very much allowed that you pay rent to your mother. Only thing is, we should not get too excited about it. Rent has to be paid only to the owner of the house. And the second thing, what many of them miss in such situations is that we don't bother to ensure that there are proper drawings in our account. We pay 30,000 per month rent in cash, but our total bank account will not have more than 15,000 drawings. So if we take little bit of care, I think till this work from home continues, there is an excellent planning available for salaried people where they can pay rent to their parents, provided the parents are not working. Okay, that is one thing which you can take care. Now, a new thing has come, the next topic in rent only. We have seen some cases where the rent payments have exceeded 50,000 rupees per month. the total rent paid by the employee is more than 6 lakhs per annum or 50,000 per month. Now, whether rental agreement is to be given, rent receipt is to be given, these are all corporate rules. I am not going into it. But as a chartered accountant, we are more bothered about the statutory rules available. What does it say? It says that under 194 IB, any person who pays a rent of more than 50,000 has to deduct tax at 5% and deposits. So here what is happening is the tendency of the employees, until someone sits on their head, they'll not do anything. Now, this 194 IB is also strangely come to their rescue. They say you can do it at the time of payment of the last rent. So they say, look, March month rent I am paying on 5th March. I have time till April 5th. Who are you to ask me TDS challan now? So for us, they'll clearly say, we will not give you TDS challan. And once the employer is not sitting on their head, they are not bothered to pay. But friends, one thing all of us need to know now. 50,000 per month or more than 8,333.33 per month and all involves PAN number. And now what is happening is this data through the form number 24Q is being captured by Income Tax Department, and the same thing is being reflected in the landlord's AIS and TAS statements. So the department is aware of the 50,000 rent being paid by you, and definitely TDS department has become very active, and deliberately I feel these people become active after 2 or 3 years. They don't act immediately, because only after 2 or 3 years the penalty of 200 rupees per day will work fully. So they also know, they sleep over it, wait till a sufficient penalty can be collected, then only they will send the notice. So please advise anyone who is paying more than 50,000 per month, apart from the company regulations, there is a statutory liability to pay the TDS of 5%, which needs to be taken care. And the next major problem with respect to rent benefit. I don't know how many of you are doing the investment proofs, or how many of you talk to employees. I do a lot of work for verification of investment proofs, and whenever we used to ask them for original rent receipt, they used to write very bluntly, my owner is a non-resident, how can I get original receipt from them? Okay, as if they are doing me a favor by staying in a house belonging to non-resident. I don't know what is the superiority complex they were getting. And I had to at least call them back and say, please take back the mail. If you can recall the mail, kindly recall, delete the mail. Otherwise, you are yourself created a blunder in writing for yourself. The moment I say, I am paying rent to a non-resident, immediately section 195 comes into play. Any person making any payment to a non-resident, it does not require him to be a businessman or a tax audit case or anything. Any person paying any amount to non-resident has to deduct tax. And now 31.2% tax I will have to deduct on the rent and deposit it. Again, these data are captured in 26AS, and they might very soon come into, I don't know how many of you observed 26 AS recently. All your Amazon payments has started reflecting. I'm telling you, it's a dangerous thing for us. Okay, your Amazon, your all this Netflix subscription, all these things have started coming into 26 AS. $10, $15, $20 are coming. But take it from me, 2 years down the line, maybe PVSS Prasad or someone very high person in international taxation will be coming and talking, and all of us will be listening to him with some grim faces, because all of us would have got notices because of that. So be very careful with dollar payments. So here, once your landlord is a non-resident, the employer need not insist. If I am an employer, I don't care. For me, if the rental receipt is given, I am happy. But as an employee, he has to be educated that the non-payment of TDS on rent could land him in trouble. Then only thing, I think we discussed the work from home policy. We discussed about 50,000 rent to non-residents. Withdrawals from bank account is a very dangerous thing. Look, whenever you are paying rent to parents, etc., I tell them, transfer the check. Even a lump sum check of entire year rent once will be a good thing. You are paying to your mother, your father. It's a good tax planning if they don't have other income. 6 lakhs, pay them. Let them have the FD, at least you are saving that money. But ensure that if you are showing in cash, if there is no bank transfer, minimum withdrawals should be there to cover the rental income. And lastly, in a HRA, don't give 50,000, 60,000 rent for a 1-bedroom or 2-bedroom house. The rent has to look reasonable. Now, everyone I have seen that the moment I started talking about the work from home, suddenly the declarations have become 60,000, 70,000 per month rent. I said, no, sir, I will take care, don't worry, my mother will show in her return. I said, ठीक है, घर कितना है? Sir, we have 1-bedroom house, okay, in Bhopal. I said, boss, मर जाएंगे. What we tell is reasonable. What you would expect from the house if you actually let out. Be little bit more than that. I am not here to preach morality, but don't be unreasonable here. So I conclude the HRA portion. There are, though it looks to be very simple, least of the following 3 is exempted from tax. There are several things which we'll have to take care of. I hope I'm clear with the HRA. Please, please.
The person is working from home, from other city, where he's not working, but he's still occupying this, like the house which he has taken on place of employment.
Yeah.
So will he be able to claim both HRAs?
No. See, what is happening is at this point had come Lokesh bhai, because many people, what happened was they were not very sure, especially in 2021, they were not sure ki the company may call them back. So many of them had kept some furniture here and were staying in some other house. So employee, as I have taken the, yes, nowhere it is written that he or she cannot claim, but we have taken the rulings and all which came into house property, where they say that the employee cannot be staying in a rented house and own house in the same city at the same time. We have, for the sake of safety, allowing only one house. In such a case, the employee can choose whether he wants to claim HRA benefit of Hyderabad or of that. But 2 houses we are not allowing. Now, these things, again, quickly I will just go through the issue, because they have become very common nowadays. Anyone who is dealing with employers or some companies where employees are there, you are facing the issue. More or less, the notice period buyout, joining bonus recovery, referral bonus recovery, all 3 fall into the same criteria. I'll just take one example and give. Now let us take, I am working in a company, and actually it is happening nowadays, I am telling you. I am drawing 20 lakhs. And suddenly tomorrow I get an offer, we are ready to pay you 50 lakhs if you can join from next Monday. And it is a fact, believe me, my team only is preparing offer letters like this. So suddenly I get an offer letter from company where my pay has jumped, or it is 3 times my present pay. So what will I do? I will simply resign here and go and join the new company. And because the new company is giving me 2.5 times, 3 times pay, I will not simply join. I say, look, how can I join immediately? I will have to pay 1 lakh rupees notice period pay to the existing company. And the new company says, don't worry, even that 1 lakh we will pay. You just pay there and come back. So now, what has happened? I was supposed to give 2 months notice. I am not giving that notice, so the company is charging me 1 lakh rupees. I have to pay back 1 lakh rupees to them. The same 1 lakh, I submit it in my new company and I get the reimbursement. The situation is clear. Now, for a new company, what it says, look boss, I paid you 1 lakh. It is taxable. I will include it tax. It is a fair enough thing. You paid me, you tax. Now what does the previous employer says? Previous employer gave me a salary of say 12 lakhs. It took back 1 lakh. So for me, logically the taxable income should be 11 lakhs. But the previous employer say, no, nothing doing. It is 12 lakhs only. It is not out of vengeance, it is legal only. Similarly, what happens is when joining bonus is paid to me, the company collects the tax. And if I don't work there for that period, minimum period of 6 months, 12 months as given by company, the company takes back the joining bonus. So in all these cases, when amount is paid, it is taxable. Now what happens when the amount is recovered? Because logically, we will say, boss, you have taken back the money. You paid joining bonus 2 lakhs, you are taking back 2 lakhs. So where is the question of taxation? But it is not like that, friends. Be very careful because every day these things are happening in these days. What was decided was, we are very clear, when I am paying these monies, they are taxable. No one objects. But when I am recovering the money, what it says is that recovery is for non-fulfillment of a contractual obligation. When I get a joining bonus, I am supposed to work in the company, say for 1 year. Now I am resigning before 1 year, so I am giving back the money. I am not fulfilling the contract. I am supposed to give 2 months notice period to a company. I am not given that. Hence, the company is taking away the money, which is a non-fulfillment of contract. And any non-fulfillment of a contract is in the nature of penalty. And penalty has got no deduction in income tax. So please remember one thing. It looks very logical. Very logical. Sir, last month they gave, I referred someone, they gave me 2 lakh rupees and tagged, sir, and that fellow, he resigned and went, now they are taking back 2 lakhs. They are not giving me tax benefit. Yes, sir, they will not give you tax benefit. Otherwise, logically, we will say, TK, they are given, they are taking back. Nothing doing, sir. Be very, very careful. No recovery gives you any tax benefit. We have to be careful about. Leave encashment. Many companies, many multinational companies are not giving tax benefit on leave encashment. These days, employees resign and go from one company to other. The wordings of section 1010 says that retirement or otherwise. Now, what is that otherwise is not defined anywhere in the Act, but earlier a 2 rupees booklet was issued by Income Tax Department, which is now a free booklet, which they give to anyone who can take it. And in the booklet published by Income Tax Department only, they said resignation is permitted for granting tax benefit on leave encashment. So whenever you get an employee who has left one company and has joint income, and when you are combining the Form 16s, heavy tax payable will come. At that time, friends, if you can ask for the breakup of the previous company, 99% of the cases, you will realize that leave encashment is treated as taxable in the previous company. So you can just use the rules given in 1010 and then give the tax benefit. Only you have to take a declaration that he has not claimed the total benefit in excess of 3 lakhs before, or the benefit claimed by him or her earlier together with this benefit has not exceeded 3 lakhs, because 3 lakhs is the lifetime limit. If you can take care about it, definitely you are saving a good amount for employees. Medical bills, a forgotten chapter for salaried employees. 15,000 rupees per month. Every time in January, February, when companies used to take medical bills, there were a lot of vendors standing outside companies with some blank bill books. And they used to sell the bill books for 100 rupees, 200 rupees. Employees used to take them, prepare medical bills and submit it to company. From the time that 15,000 benefit was removed, thank God, even that activity stopped. Now we don't see anyone outside any company. But is really a medical bill forgotten chapter for anyone, not even the employees I'm talking about? I don't know how many of you would have read Section 80D in detail. Section 80D says, if you are having a senior citizen in the house, and such senior citizen is not having any medical insurance, then amount spent up to 50,000 rupees, you can claim tax benefit under Section 80D of the Income Tax Act. Once you have a senior citizen in the house, 50,000 is nothing. Every month, 5,000-6,000 rupees we keep spending. But the only problem is no one is bothered to save the bills. So friends, this is something what we have to educate. We have to educate the people that if you have a person above 60 years, see, there is one doubt. Many people, many MNC employees say, no, I am covered under my son's employer. So I am part of that family group given as dependent in my son's case. That does not matter. It says only if you are directly not paying anything against insurance premium, medical insurance premium, then it can be allowed. So, if you have a 60-year-old person in the house, 60 or 60 plus, please tell them two things. One is they have to preserve the medical bills, and the medical bills should be in the name of parent only and not you. You must be employer, you must be claiming, but let the medical bill be in the name of parent only. And the last point, under medical bills, I am talking more as a precaution. Because it is covered under Section 80D, and Section 80D says cash payments are not allowed, it is preferable that the person pays for medical bills other than cash. Even if you pay cash, I think there is a law and all where you can fight, because saying that these two clauses are different clauses, but a timely advice before they spend the money, because every medical fellow will have now a Paytm, Google, debit card, credit card, anything. Let them pay. No, the problem itself doesn't arise. So if they can pay in a mode other than cash, I think every one of us can claim 50,000 rupees tax benefit for senior citizens. Please spread this. It is a big advantage for all of you. Now, lastly, in other issues, we had an excellent thing for everything what employers were doing. They're talking COVID. Okay, anything, vaccination, COVID, hospitalization, COVID, furniture, COVID, computer, COVID, due to COVID. So everything was COVID only, and they say it is exempted. One thing I'm telling you, COVID started in 2020. Till first, I think June 21 or May 21, till that clarification came, I'm telling you friends, everything what the company did for employees was taxable. Thankfully, first time I have seen an income tax circular saying very proactively that, look, whatever you did for COVID, whatever expenses you have done, we will treat it as non-taxable. It was also substituted in the budget. They brought a section, 17(2) was amended, 56 was amended, wherein they say, okay, even payment of money to family members, everything was clearly not taxable. So as on today, if you would have given the advice at that time, nothing will happen, provide injections, you can claim tax benefit, it was a wrong thing. Till May 21, I am telling you, many of my companies, we had paid the tax also, but luckily what happened, the circular came before we filed the final ETDS returns. So luckily, we carried forward the TDS paid and used it in the next year. But okay, that I'm not talking about. What I would still like to talk about, one area which is not taken care by many companies. Different opinions are coming even from Big Four. One Big Four is giving an opinion and the other Big Four has given a contrary opposite opinion. Without naming them, what happens is many companies have provided chairs, tables to employees. In the COVID scenario, the companies have said you can purchase table, chair, and you can submit us the bill, we will reimburse you. And everyone has said due to COVID, it is an official expenditure, it will be tax-free. It is a furniture provided for official use. Now, no one knows what is an official use, but if you take a conservative view and look at the Act which talks about use of movable asset and transfer of movable asset. Use of computer, nothing is taxable. Transfer of computer asset, definitely you will have to calculate depreciation, calculate the written down value, and then take it as taxable. But as far as anything other than the systems are concerned, if I provide a table and a chair, either the table and chair could be in company's name. Even though it is in company's name, just because the person is using, they have to pay TDS, use of asset. But alternatively, what is happening is every company is just asking me to buy table, buy chair, and submit the bill, and I am paying tax. Take it from me. It is direct transfer of asset by company to employee, 100% taxable. Personal asset paid by company, there is no way you can treat it as non-taxable. Many companies are still treating it as non-taxable. Look, there are two things. On one way, okay, practically it won't come out. There could be a 15,000 credit for furniture in the account. We say company gave, nothing will happen. But if same thing comes into scrutiny, if this case is picked up for scrutiny, And in scrutiny, if you say that this 15,000 is reimbursed to me because of COVID furniture what I brought, 100% the ITO is going to tax you. And now the tax is not simple. Tax always follows with tax, interest, penalty, prosecution, etc., etc. We don't know what it is. So when you are filing the returns, if you are happening to check the bank statement and see the credit, please write a mail saying that it may be taxed. We advise you to include and pay the tax. No employee will include and pay the tax, but from your side, at least you are given the advice. But that is one gray area which is there. Don't advise any company that you need not pay tax in such cases. Otherwise, tomorrow the heads will fall here. So these are all few things. See, LTA I am not covering, children education, professional education, so-called now everyone wants to give professional development allowance, car reimbursement, hostel allowance, children allowance to employees. Because last few days I am just going through that only. Look, what I say is, what can be given as an allowance, like children education allowance, 100 rupees per month per child. For 30 rupees, who will do all that bulwark here? You have to again create a separate head, do everything, leave it. Hostel, how many children's, how many of the employees' children are studying in hostel? Simply by giving a benefit, you'll have to take the proof. Professional development is again a very big area. Books and periodicals they give. Okay, a lot of things they give. Meal coupons. I'm telling you, it is not suggested that we tell any company to give meal coupon. Because provision of food during office hours is exempted. Please look at every company, 8 out of 10 companies are giving meal coupons, treating it as tax-free. It is not correct. Provision of food is the only thing which is tax-free. 50 rupees per meal. Okay, some people say, no, 3 times my employees eat. So 150 into 22 days, that many coupons they are giving and treating it as tax-free. I don't get into 2 times, 3 times. If you are actually providing food in the office premises, or, okay, just to be on the safe side, I am giving you meal coupons. That meal coupons can be used only in the canteen which is available in my area. Suppose I am working in Mindspace, there is a canteen in the Mindspace, and because I don't have a canteen here, you can go out and eat only there. I have a case. But what is happening otherwise? I am giving Sodexo coupons, all the coupons are being taken and they are going to Best Price or Reliance Smart, taking groceries, purchasing vegetables and all, which is not allowed, sir. So please be careful with the meal coupons. I don't agree that they'll give you tax benefit. So these are how the new things come up in taxation of salaries where you have to be careful. Now, yeah, quickly, I'll just start rushing from now. No. What way? It is obligation of the employee met by employer. No, it's difficult to claim. Actually, see, companies should have taxed you. But we cannot take a plea that company did not tax me, so I did not pay the tax. Company is definitely claiming expenditure. No, but what they say, they put it as staff welfare or some other thing. No, they put it as some employee benefit expenditure and claim it. That's what it is. Huh? Okay. Now, very quickly, I don't know how many of you are involved here. Very dangerous thing. So I'm just rushing up. companies like Qualcomm, Microsoft, or anywhere, please take the moment you get Form 16 of any employee, go to 12BA. First thing is, don't quote the fees. Seeing the Form 16, please don't quote fees that we'll do it for 500 rupees, 1000 rupees, or 2000 rupees also. Take the Form 16. Don't see his salary, because it doesn't matter if they are earning 1 crore or 10 lakhs, the fees will be same. But go down and see 12BA. Under 12BA, look at one item, stock options. If there is any figure given as stock options, a humble request to all of you friends, if you are charging anything less than 7,500 to 10,000 for such return, you are doing a disservice to yourself, because the time spent will be that much. So now you have a perquisite. Under perquisite, you have a stock option there. Ask every employee, they will say, no, my employer has deducted tax. Don't even get into it. Why are you asking me? I already paid the tax. Very rudely they talk, as if we are asking them to transfer the stock options in our name. But the fact is like this. First point, these stock options are foreign assets. So the Black Money Act comes into play. And one bad news to all of you is that the department has woken up now, and every day about 30-40 notices are being sent. So that's why I'm asking you to charge more. Now what does it mean? In a stock option, the company allots you shares in foreign company. Whenever I allot shares in a foreign company to you, what I do is, I will check in which slab you are. Suppose I gave you stocks worth 1 lakh rupees and you are in 30% slab. So immediately what I am doing is, I means company, I allot shares, I sell off 32,000 worth shares there. 1 lakh is what I allotted to you. You are in 31.2% slab. 32,000 rupees shares I simply sell outside. And I credit in your shares account 68,000 rupees. You ask me, what is this? You gave me 1 lakh, you are giving me only 68,000 rupees. Then I say, look boss, it is taxable. I have paid the tax on this thing. Fine. So employee feels tax is paid. There are two issues here. One is, there is a price fixed. Whenever the perquisite is calculated, it is calculated on the fair market value provided by the merchant banker. So that day, on the date of allotment, the merchant banker valued the company share at, say, $12. So $12, say 100 shares, 100 into 1200 and multiplied by INR. That is the value of shares allotted to you, and 31.2% are sold. When they sell the shares, for the recurring 32,000, it won't be $12. It could be $12.05 or $11.95. It won't be exactly $12. Or it may be also, it doesn't matter. But what invariably has happened is, you have sold some shares in foreign country. You might have received only 100 rupees profit, but when you don't declare the capital gains, you are concealing the transaction of capital gains from the so-called black money people who always start with penalty of 10 lakh rupees. They only know 10 lakhs now. They don't know any figure. Their counting starts from 10 lakhs. No, shares you sold, you did not declare, 10 lakh penalty. Everything is asking me 10 lakh rupees only. I'm fed up. I said, bribe 10 lakhs, sir, balke. So I got so fed up, I'm telling you. So first thing, whenever there's a perquisite, ask for e-trade account. They have a broker, like we had Carvi, we have Zerodha, we have so many things. They have e-trade, they have some, lot of other names are there. Take their statement for 12 months. That statement clearly reflects how many shares allotted, how many have been sold. So for every share sold, please declare it in the returns. Capital gain. Amount does not matter. Amount is not material, but materiality doesn't count in Black Money Act. Point number 2. Every share allotted to you will earn you some dividend of $10, $12, $15 like this every quarter. So there are chances that your shares have earned about $100 in the month. So $100 even at 70, 7,000 rupees is the dividend income earned by you. And again I am telling you that dividend is a foreign income taxable in India. Clear? Then there is third angle. The third angle which comes here is that every time a dividend is credited into your account, that same company deducts tax. Sometimes it is 25%, sometimes it's 30% or so, but 25 or 30% of the tax has already been deducted, for which you can claim relief under section 9090A. So ultimately what is happening, on that 7,000 rupees, either you are paying 1.2%, 15 rupees tax, or you are paying 5.15% tax, because 25% is already paid. So the tax effect is only 100 rupees or 200 or at the most 1,000 rupees, sir. The tax effect. But again, two things are involved here. When you are claiming that double taxation relief, it is very, very important that you have to file form number 67A before you upload the return, or before we file the return. Non-filing of 67A will deny you the credit what you might get in against dividend. So please, whenever you see perquisite, it is not simple. You have to first offer capital gains, offer foreign income, file 67A and do everything. And if you feel that is enough, no, that is not enough, because there is a Schedule FA also you have to give. Schedule FA, again very vaguely worded. I asked the person today, sir, ఎట్లా ఫీల్ చేయాలి సార్, ఏం ఫీల్ చేయమంటారు సార్ అక్కడ అంటే, రాసుంది మీరు చేసుకోవచ్చు. దట్ మీన్స్ హీ ఆల్సో డజంట్ నో వాట్ టు డూ. ఐఎమ్ టెలింగ్ యూ ఎగ్జాక్ట్లీ. It says maximum value of the shares held any time during the year. Now what should I write as a maximum value of shares? It's a very serious thing, friends. Try to understand, because I know I am confusing you, but I have to tell you this. Better be confused rather than ignorant. In Schedule FA, you have to give value of the shares held by you any time during the year. Now value of any statement you see, it will give you only the closing quantity. So what you have to do is you have to take the 12 statements of E-Trade or other broker, Morgan Stanley is there, so many things are there. Calculate what is the quantity held by them as on 31st March. Add to it how many shares are sold during the year. Check the opening balance also. And then another big problem is, God only knows what value we should give at cost. What is the dollar rate? What should I do? Frankly, no one has told us what to do. Only as of today, they want figures to be mentioned there. So 2 years back, they wanted figures to be mentioned there. We are also not so serious. Simply we took the figure, started putting some 80 rupees value, 90 rupees, what is the dollar value, we started putting, and then we started getting notices also. Last time you declared this value, this time you declared this value, it is not matching with your perquisite, and whenever there is a fall, last time the value is so much, this time the value is so much, you are not declared the capital gains relevant to that. So what looks as a simple waste exercise to many of us, now the departments have started taking action. I have one request to all of you. When you write the values of maximum amount of shares held any time during the year, we started giving in 2 rows. The quantity of shares sold we are writing in 1 row, and very clearly quantity obtained during the year. That also we are writing, because the quantity obtained during the year, I need to have a complete working of what is the value of perquisite, how much I have paid. So the value of perquisite plus the amount paid should be equal to the value of shares obtained by me during the year. And still you will get a notice saying that your perquisite is so much, why you are done. So at least if you have a working, you will be able to say, look, this is how we have put the figure. So that's why I say, whenever you see a Form 16, whenever you see perquisite, don't ask less than 7,500 to 10,000, because a senior person will have to spend at least 2 days or 1 full day filing that return of ESOP. Capital gains is involved, 67A is involved, foreign income is involved, 1990A is involved, and then valuation and disclosing of stocks, plus immediately you have to disclose how much foreign income you are claiming here. Even that non-disclosing of income, you might have included it in the tax, but by not putting in Schedule FA how much dividends you are issued, that also involves penalty. And tell everyone, the moment they have 1 share also in foreign country, they may not fall into any other criteria, 0 income, no foreign travel, no electricity bill. But the moment they have that 1 share outside India, makes it mandatory for them to file return. So let them be very careful on that point. So that's about ESOPs. If I confused you, I confused you. My intention was only to tell you that it is serious, then you can take care of that. House property, very quickly, now I'm, see here, house property, there's only one issue what even my articles and my even CS staff is doing the mistake, so I thought I'll just tell you this thing. One is very simple rule that unless the construction of the property is completed, we will not be able to take the tax benefit. It is a very clear thing. Now what is happening is, in the first year of construction, the housing loan certificate is a very vague certificate. When they give the certificate, they say this is to certify that so-and-so person has taken so-and-so loan, and of this, so-and-so is pre-EMI interest, so-and-so is interest, so-and-so is principal. Now, the banks give pre-EMI interest separately, whereas from income tax point of view, that pre-EMI interest has got no relevance. Interest during the year in which the construction is completed is 100% allowed. So please don't do 1/5 to that pre-EMI interest also. Only interest before the year in which the construction is completed, only for that 1/5 should be considered. Otherwise, please don't consider 1/5 interest for PMI. I hope we are all clear about 1/5 and all. Many mistakes I am finding, so I thought I'll just tell you, joint loans continue to be a big headache for all of us. Okay, see, just by having a spouse who is not working or working. This is another area which is going to create a lot of problems for us. I take loan I purchase a house, only I am the earning member, but I want to add my wife because I fear her. If I don't keep her, she will not make me live peacefully. So me and my wife are the owners of the house. She has not paid even 1 rupee. Okay, but she is having a lot of other income. Now what I do, in the first year 4.5 lakhs interest is paid. I claim, no, both are equal. Equality persists, so I will claim 2 lakhs, she will claim 2 lakhs. After 4-5 years, the interest comes down to 3 lakhs. Then suddenly my equality disappears because 5 years are over after marriage. I say, no, I should get 2 lakhs, she should get only 1 lakh because she is not paying me anything. Then afterwards, less than 2 lakhs, they say, no, she doesn't do anything, I should only get. This is the biggest mistake salaried people do. First point, now it is coming out clearly after so many years. Unless the share is clearly mentioned in the sale deed, it has to be 50-50 only. If I don't want, then I should have a very clear-cut demarcation between the funds being used. What is the margin money I paid? What is the margin money she paid? What is the loan? How we are sharing the loan part? And what happens is, what I decide in the first year will continue for rest of the life. In interest, as well as tomorrow if I receive rent. After 15 years, the moment I start getting rent, I am earning, she is not earning. I say, no, she will not allow me to touch the rent. It is her income. I don't get anything. See, all this tax planning won't do. If the first year you say it is 50-50, for lifelong it is 50-50. You can't keep changing the house because interest paid for purchase of or acquisition of property only is exempted. Every year you are not buying or selling the property. So what is decided in the first year will continue for the whole life. Let us not go for much thing. Now, I'll just quickly run through the general precautions. 80 DDB versus 80 DDU. 80, because here I'm talking as an employer when you take the proof. 80 DDB talks about specified diseases. And the wordings used are amount spent up to that amount, 40,000 or 1 lakh is exempted. So as an employer, as a chartered accountant, we are supposed to take or see actual medical bills, then only we can allow the tax benefit. Whereas 80DD and 80U, physically handicapped or mentally retarded is concerned, it is a fixed amount. I don't require any bills. If I have a certificate in proper format and the certificate is not too old, I, as a chartered accountant, can definitely claim the tax benefit. Let the employer do whatever they want, but at least while talking, ensure that the person is not dead. Okay, because people start claiming the benefit even after 3 or 4 years after the death of the person. As a chartered accountant, now we have to be careful. If the person is alive, you can claim the tax benefit. Then PAN number or PAN card, I already explained you. Only problem is that if you are doing salary TDS of any company, be very, very careful with respect to previous employment income. What happens is, very vaguely, it doesn't happen every time, but it has happened with me only in 2 cases last time because of COVID. The income was very less. Income was about 1.5 lakh, but some problem happened where he had deducted 75,000 rupees tax. And the software also took the same amount. Look, when you are filing form number 24, the 192 clearly tells you one thing. You have to make that TDS deduction except house property loss, no other benefit can be given by you. So what happens is, when you calculate the tax, remove previous employment income and calculate. Otherwise, what happens is I am adding 1 lakh rupees previous employment income, and even at maximum, my tax is 42 or 43,000. But if I found that 50,000 was deducted earlier, then I am getting into a short deduction of tax. Advance tax, excess tax deducted by previous employer cannot be considered by me while doing TDS. So be very, very careful here. Okay, we'll just go through, avoid this, and I'll come to ETDS returns quickly. Deepak has also come signaling that I should stop. Thank you, Deepak. Yes, Bhavani.
Just tell me about the assets and liabilities to be and the employee assets declares.
Next slide. Thank you. Now the time of friends, all of us are expert. Now the day is over where I should start telling you what is the column, how to fill each column and all. I'm assuming all of us know about it. But one thing all of us know, that it is easy to file an original return, but it is very, very painful to file a correction return. And the pain increases when you have about 1,500 employees. I'm facing the pain, so I'm telling you the same thing now. And the pain aggravates like anything if it is found that in every case, about 300 cases, there is a short deduction of 50 paisa, 80 paisa, 1 rupee, 1 rupee 20 paise. And in all total, if you do, the total TDS short paid will be 130 rupees or so. Okay? Now, the company gets a notice. Hey, 130 rupees, Pankaj. Why are you worried? Pay off, you pay 150, you pay 200 rupees. What is there? Why are you so sad? Pay 200, he'll say. Arey boss, you have paid 200, but what should I do? Now the problem is I have to file a revised return. That adding of lines, one is the moment you do entire work, the schema changes. No, sir, it is a previous version, do it again in the new version. That is the biggest headache we are facing now. What happens, friends, is know the rule. I told you about correction return difficulties because that 130 rupees correction will take you 2 days and no one will pay you fees. It is absurd to charge 10,000 rupees for correcting 130 rupees. So we also, out of shame, we don't charge. But the problem I am telling you is very tough. There is a rule. What does the rule says is that income should not be rounded off. Okay? Income should not be rounded off to, and the tax should be in decimals. Every software which is available in the market, and I think most of the youngsters sitting here, whenever you are writing the formula, we start with is equal to round. That round is there in ours. Maybe in our exams we got so many rounds that the round has become a habit for us. We start with round is equal to round. And now that round creates a problem. Wherever it is 1, 2, 3, 4, it rounds below. And even in your 30% slab, your tax due short is 1 rupee 20 paisa. So, because the rule says we cannot round it off, don't round off the income. And tax also, even if it is 32 paisa, 33 paisa, we will have to pay 35 paisa or next rupee, but it should not be rounded off. Because of the softwares, because of our habit of rounding off, it is generally found that we are paying a short TDS of some paisas, maximum 1 rupee or 2 rupees. That is creating a problem because unless you file a correction return, that will not go. And filing of correction return also, it's not simply you keep adding that 30 paisa, 40 paisa there. Because every addition should match with a deductee sheet also. I have to first show that I have paid you that, I have paid that 1 rupee tax on your behalf, and a new problem comes. I add 1 rupee, I cannot say 0 income and 1 rupee TDS. So I add here 1 rupee income, 1 rupee TDS. I again pay, and again it says, Array, on 1 rupee you are not paid 31.32 paisa tax. Again file a return. So first thing, we cannot keep on doing the calculations like this. Do one simple activity. Please, in a side, calculate the tax. Calculate complete tax, and then whatever tax is there, I have one more column plus 1 rupee, and then total up and add that 1 rupee or 2 rupees and pay the tax. I have told every company where I am working, because I have more than 1500, 1600 employees, 3000 rupees they have to pay extra tax in the last quarter. So that gives me 2 rupees per employee, which is the maximum. So what I do is, every employee, I simply add 2 rupees and I put it in the return. Otherwise, this rounding off would be a major problem which we need to take care. That is the first serious problem I am talking about. Second problem, because of the notices. Illogical, but unfortunately you can't talk to computer. CPC is playing havoc with us, and we can't explain anything to computer, so we have to be very, very careful. Now what happens is, 3 quarters you are filing the return. Deductee amount paid, TDS in the first 3 quarters. 4th quarter we do that, and we also give the total amount. Now what is happening is, what you put in the deductee sheet in the first 4 quarters will come in part A. So far we are clear. Now what we are not really bothered is that the total mentioned in part A should tally with 17.1 only. Just today, one company, they had given some smart watches where the employer has paid the TDS. So some 32,000 was a smart watch given. So they again, what did they do? They added it in the deductee detail, and whatever tax is paid, they have added it. Now what happens is, whenever a gift is given, generally it happens with perquisites, where meals also it happens, gift also it happens. Whenever the employer is paying tax, they say, how can we have whatever tax I am paying, I have to put it in the deductee details. They say, how can I put TDS without putting the income? The rule is very simple, sir. We have to be practical now. I cannot be legal, like, because I cannot talk to this computer. 100 times I look at it and tell, no, you are wrong, you are wrong, you are wrong. It is not going to listen. So I have to be practical. So what I had to do, never write the perquisite in the deductee. I hope I am clear. Whatever is the perquisite you are giving, please don't mention it in the deductee column. But whatever TDS is there, kindly add to the salary TDS and do it. So whenever you file that 24, please do one exercise every month. Salary paid. You have a gross salary in the salary register, that is the salary paid. Add NPS. Okay, because NPS, we have to put it in 17.1 and give a deduction in 80 CCD 2. So to that, add NPS. This is the amount we should show it. Mistake is happening in adding perquisites and adding tax paid by employer on non-monetary perquisite. Again, here also, what we found was that in the ITR 2, tax paid by employer is coming as deduction in perquisites. So if I add it to salary, it is creating a problem for me while filing ITR. So be very careful in ensuring that the figure which is mentioned in the deductive will come in 17.1. It should tally. The perquisites need not be there, and it can be shown separately. The figure of perquisites should tally with 12BA. And here, another thing what I thought I'll tell you was that while filing the first 3 quarter returns, it doesn't matter if you declare even those employees where no tax has been deducted. Many of us don't declare the 0 TDS cases. In all such cases, what is happening is my salary being reflected in Part A is much lower than what I am starting the 17.1, though there is no problem. If the figure mentioned in 17.1 is more than Part A, no one is going to question you. But if the figure mentioned in Part 17.1 is less, we are into major problem. Please be very careful. I am still fighting cases of 17-18. No one is even listening to me. Then there are certain deductions. Though reimbursements are exempted, we give as allowance and then give the deduction. Examples of that could be telephone, internet, and then your car running and maintenance for employee. Every month we give the money and we ask the employees to submit the bill, and then we give the tax benefit. Now what is happening is there is no section under section 10 which gives the tax benefit on internet and all these things, car running maintenance and all these things, because reimbursements are exempted, allowances are taxable. So when you file the returns, when you give the figures in Annexure 2, let the employees give the bills every quarter. In that quarter only, kindly remove the figures and then put the figures in deductive sheet, so that you don't have to claim tax benefit on car running and maintenance, telephone, internet, broadband separately. Otherwise, we are in for a issue. House property loss, we have to show as a minus figure. Otherwise, it gets added in the income. 24, I had put it as a positive figure and got massive notice. Be careful. PAN number of the landlord and PAN number of the financial institution. Financial institution we need not bother, but landlord, please understand that it is being captured in AIS and TAS of the landlord. So don't think that you can just go to railway station, take a PAN card there, okay, and just come and give it. It becomes dangerous because through compliance, the person has to either deny that it is not his income or include that income and pay tax. So be very careful about it. Okay. So in 24, we are still facing one problem which I have found today. I don't know if anyone has got the solution. 80D, it is asking a combined figure. It just asks gross amount and gross deduction. Now, whenever I am paying more than 50,000 rupees or more than 25,000, there is no way for me then to put the, suppose I am paying 24,000 for self, spouse and family, 28,000 for my parents who are senior citizens. So I will get 24 plus 28. Gross amount is same, deduction is same. But strangely, it is putting some figures. What they do is, first 25 it is giving to me, then it is doubling the amount, putting that as a gross figure and putting that. So ultimately the deduction is same, but the presentation of 80D is becoming wrong. If anyone has a solution, you can do it. But today also, I did not find any reason. So I'll not go more into it, except rounding off was one place where I thought you should be careful, and cross-tallying of data with Part A to 17.1 is an issue. Rest, I think there's not much change here. Now, again, regime change. You have to give only in Q4. There is no other place to tell which regime you are in. Though the rule says that you cannot change, it is better. Be careful with DDMMYY format, because most of the TDS we give within 7th. So 6th July or 7th June could create a problem with interest. In the Excel what you are doing, please ensure that the format is DDMMYY. Otherwise, if it is MMDDYY format and you would have just put 7th June, it will go as 6th July and interest will start throwing in. That is a very common problem, will not be visible to naked eye unless you get an interest. Okay, so be careful. First set the DDMMYY format, and we are only bothered about date of date of credit. Date of credit, just copy the entire column and paste it in date of deduction. Many times you don't do it and we get the notice, so you can just copy and do it. NPS contribution I told you, tax paid also I told you, and TK. Lastly, till 2 years back, there was no problem if we used to give a single figure as income tax. But in the Form 16, which is generated by Income Tax Department, if we are giving single figure for tax, even for a 1 crore and 50 lakhs and above income, everything is appearing as tax, but it should have tax, surcharge, rebate, and cess. So while filing the return also, kindly gives tax, surcharge, rebate, cess separately, otherwise it's creating a problem, okay, in this. Now, filing of returns, as I told you at the beginning, it is not easy. People are filing complaints against chartered accountants. So friends, first thing, I'll just take 5 more minutes, though I have 10 minutes. I'll try to finish off in 5. Please understand one thing. It is very easy for people to complain and blame chartered accountants. The first thing what should happen this year is that, come what may, stop taking the returns after 15th July. Let it be. If all of us decide we are not going to do it, they will let them pay the penalty. We have the habit of helping people even though they come on night of 31st also. And now what is happening is, you can't simply file the return. You have to check 26S, you have to check TIS, you have to check AIS, and then if perquisite comes, stock option comes, it's a different issue. So please ensure that you collect the data, because we cannot say that I will check just 26AS, TIS, AS and then file the return. I have to know that there are several items which are not there in TIS. For example, total rent received by employee, the person is never there in any TIS returns. It's only the figure which is given as deduction. Income of minor children, no one is bothered about. They keep FDs in the name of minor children, minor son, minor daughter, which will be getting them interest, but no one is bothered to come and disclose. Likewise, entire dividends may not come. So, while it is mandatory, first is don't file any return till June 15th, because June 15th is the day where we reasonably expect the 26As to be completed, AIS, TS to be completed. While it is important that we check them, please don't be in a hurry to assume that everything is there in TSAs, because it is also changing. Let the employee create an Excel form where write everything, how much income you have earned from all these things. At least let him sign on a blank paper. If he has written 10 rupees and you see something and make it 15, at least you are safe. You had not given, I found it, so don't blame me, is what we can say. But if we don't bother to ask the information, Everything will be our mistake. So with the amount of penalties coming, one is let the data collection be proper. Let an Excel be prepared wherein everything you ask, including the details of minor children and interest. Then secondly, take the password, you yourself check AIS-TAS. Whatever amounts are mentioned in as sale, invariably every person in COVID has done this share transaction. So be careful about it. There is capital gain. Again, all the statements are coming in PDF. I pray at least either we have to learn conversion of PDF into Excel, but our articles are very good. They are doing this job. Some I love PDF, they say. At least they are loving PDF and they are making our job helpful. So through that we have to convert it into Excel and then tally the figures. Otherwise it would be a problem for us. Okay, so collect the data. Foreign income, have a separate page. Do you have any foreign? Today, the last 2 days, I am sitting in black money department only. I had declared a bank account, but like how in India, when we open a bank account, they open one demat account, they open one FD account, they open one RD account. I believe in Singapore also they did the same thing. So I had one account which was declaring, and then we realized there is some saving interest account, share account, this account, 6 years, 0 transaction. But now he is saying that I'll put a penalty of 10 lakhs on you because you have not declared those 6 accounts in your return. I am telling him, boss, where is the question of penalty? 30% on the undisclosed income, 30% on 0 is 0, 300 times of 0 is again 0. You cannot. But luckily, I didn't have any transactions. But God forbid, if there would have been even $100 or $10,000, the client would have caught my collar making me pay 10 lakhs per year. So please, friends, we are in for a tough time. If you don't have a document which says that they don't have any foreign asset, foreign income, foreign bank account, foreign house property, foreign insurance, tomorrow if it comes out, only you are going to be blamed. Please take care. And then quickly I'll say, every person has got pending demands. Just go and check. Now the dispute resolution committee has already been formed, but I'm yet to see that form which they say we have to file. I think very quickly Deepak will have one session on the dispute resolution. Let us go and try to clear all the things. New regime, I told you. Income from minor children, I told you. March 31st, 30th, I always thought they are my days to enjoy because I worked very hard throughout the year. But last 2 years, March 30th, 31st have been miserable for me because Income Tax Department just sends compliance notices to everyone, and for 300-400 people come and sit in office. Mera dekho, kya dekhte bas? You earned, you didn't tell, and now I have to open all and then say. So it has become a major problem. You cannot file revised return. Every year I'm facing, friends, lastly, 12 o'clock, 12:01 a.m., the site closes. Please, that's why I'm telling you, don't take any return, because from 12:01, again it opens at 12:03, 12:05. Within 3 seconds, the site opens, but you have to pay with penalty 5,000. The moment client has given you return, you don't file, penalty is yours. Charging 500 rupees and paying 5,000 rupees penalty, we can be ashamed to call ourselves chartered accountant in such case, but don't try to help others. Again, no belated returns. This concept of updated return, belated returns is making lives miserable. Let us do small work, better work. Don't go for volumes. Let all other young chartered accountants enjoy. Friends, I think thank you very much for the patient hearing. I only hope I did not confuse you. I only picked up areas where I thought I am facing problems so that you should not face. Thank you very much.
Thank you, sir. An excellent session. Thank you for your 360 degrees coverage of all the topics. I think it was 1+1 offer. Sir has given details about, apart from the salary, sir has given us the good tax planning also. So I think sir has also very well covered new regime, old regime. That was an added advantage, sir. Thank you so much. And the fact that the audience till the last minute is increasing definitely shows your connection to the subject and to the connection to the audience. A very well received session, sir. Thank you so much. Friends, as I always says, any program is successful with the audience. So we request you to please take out your time. It will not only enthusiast our managing committee, it will also boost the confidence, and members will try to give you more extra. The speaker will give you extra things which is not in his scope for the day. Similarly said. So I request you to please come for the physical seminar. It is our humble request, and so that we can learn new things, more things, and virtual is always there, YouTube is there, everything is there, but nothing can compensate the fellowship and the knowledge dissemination in the physical seminar. So getting back to the normalcy, please attend the seminars, whatever we are conducting. Next week also we are having seminar, and June also we are planning big things that we'll share in the newsletter. So thank you for your patient listening and honoring us with your time and active participations. May I now request Rajendra sir, Singh sir, to please present a memento to the speaker. Thank you, sir. You're on dot. Sir, as we all know, was a past chairman, and I was a secretary during his period. Sir has give me many things to understand, and the many renovation part was taken up during his chairmanship, the new chairs, the logo, and all these things. We are reaping the benefits of it, sir. Thank you so much, and looking forward to meet you again. Thank you.